to welcome you all to the 63rd Mumbai ATMA Meet. Now, talking about the speaker for the day, he is not a new face at all to most of us. He is the founder of Wave Strategy Advisor. By qualification, he is a CMT, an MBA, and also an engineer from Mumbai University. He has a vast experience in capital markets and has worked with investment banks like Nomura Holdings within the capital markets division. He is also a known face on channels like CNBC, Z Business, and many more. And adding on to his feather is that he has published research books on usage of tools like NEO Wave analysis. So without taking much of his time, I would hand over the podium on to him. It is a request to all the delegates over here, if there is any questions that you all have, we will be having a Q&A session after his session. Only then please ask the question. It is a disturbance for all the others and the speaker himself if there is, constant questions coming up. And also if there is any other queries or any other complaints, comments, please hashtag us. We have a live tweet, hashtag us ATMA India. We are there, our Twitter handle is @ATMA India. So please hashtag us and we'll be there to help you. Thank you. Over to you, sir.
Okay, good afternoon everyone, and it's always a pleasure to speak at ATMA. I think I've also been here about a year back, and it's like an Herculean task to teach something in such a short span of time. But I'll ensure that it's not only about NEOWAVE. The next 3 hours is going to be about what we do also and what are the various techniques that works in the market. Learning about NEOWAVE is not going to be an easy thing. There are a lot of things that goes into it, but nevertheless I'll try to ensure that you understand a lot of those aspects, you understand different aspects of technical analysis, and you also understand that something like this works in the market and it exists. Many times the problem is we don't even know something like this exists, and then we are not even aware about it. So this 3 hours of session is going to be more of making you aware about what kind of methods that exist within the span of technical analysis. Let me very quickly start with about us, what we do. We are an independent research company. We provide research on equity, commodity, forex markets. We publish research reports. We provide intraday positional advisory to retail clients, to HNIs, to a lot of other places, and we also provide the entire background behind this research is again using Elliott wave, time cycles, GAN analysis to some extent, Neo Wave. So we use a lot of technical analysis in order to come out with what is happening within the markets and how mature the trend is. About me, I think Divya has already introduced about myself, so I'll not waste much time here on who am I as such. So what we are going to cover is very quickly. It's going to be like a crash course. It's not going to be a very detailed session because the time is not prudent enough to complete the entire NEOWAVE. So it's going to be very fast, very quick. You might not be able to understand a few concepts, so yeah, I would request you to probably go through the book which is provided by Glenn Healy on Mastering Elliott Wave, which covers NEOWAVE. Let me now very quickly of wave 3 and wave 5 should break the 2-4 trend line. If the 2-4 trend line is broken by wave 5th, it means that wave 5 is either complete or it is forming a terminal pattern. What is a terminal pattern? We'll come to that. If 2-4 trend line is broken by any part of wave 3 or 5th or by wave 5th, which means that wave 5 is not over, wave 5 is over, or wave 5 is forming a terminal pattern. Okay, that's the rule. The next rule. Now if you learn only Elliott wave, there are 3 rules. First rule is Wave 2 should not retrace more than 99% of wave 1. That's the rule in Elliott wave, not Neo Wave. Rule number 2, wave 4 should not enter territory of wave 1. Again, over here it's wave 2, over there it's wave 1. And the third rule is wave 3 should not be the shortest. These are the only 3 rules in Elliott wave. But when you apply only these 3 rules, the complexity of the chart suggests that there is a possibility it can go up, there is a possibility it can go down, there is a possibility it can be sideways. So the theory loses its validity because it's no longer objective. Also, one very important thing that Glenn Neely said, when we are in the middle of correction, the predictability is very less. Which means if the complex correction is ongoing and we are in the middle of correction, the predictability is very less, so you don't know what's going to happen next. Try to understand it. Elliott wave is all about probability. This is going to be happening next if this happens. So if wave 2 retraces less than 61.8 and third opens up, which means this is going to happen. You know, it's all about probability. It's not about certainty. Many people say, you said this is going to happen, it didn't happen. So I'm like, you are predicting future, I am not God. You don't know what's going to happen to you tomorrow, so how can you expect market to behave the way you want every now and then? You need to understand that. It's not possible. What we are trying to do is we are trying to play with probability. If 70% this is happening and it is working, fair enough, that's brilliant. And if you can maintain your risk reward to 1:1.5 or 1:2, another amazing thing. Try to understand there are going to be losses. You need to keep losses short. I am sure if you read the books, it's mentioned everywhere. But that's a fact. Let the losses, cut the losses, and let the profits run. It's opposite to many of the tendency that we follow or no other possibility, but this should happen. The accuracy goes so high during the turning point that you are like, there is no other way in which the markets can move on. One such time was in February 2016 when the low was being formed. We were like pretty sure it has to be the low because there was channel, there was time cycle low, there was Neo Wave confirmation, there were so many things which confirmed that the low is formed. We are exactly at the opposite scenario right now. The way I am looking at the markets right now is we are in a topping process. The topping process and the distribution process is a slower process than the bottoming process. Distribution and topping takes time. The bottoming formation can be in form of a pen. So distribution and topping takes time. If you remember the rally which started in 2014, 2013 August it started, went all the way to 2014-15 Jan. 2015 Jan, till that time the markets were going up, down, all over the places. It was an expanding pattern. If someone remembers, it was an expanding pattern, and currently it is no different. It's again an expanding pattern, going up, down, up, down, up, down. It's very similar to what happened in 2014-15 rally. It's very similar to that currently what is happening. And with each rise, the euphoria is created. With each rise, a strong euphoria is created, but the underlying stocks are not moving. Trust me, even if you would have been bought around 10 different stocks, out of 10 stocks, 5 stocks would have been in your favor, 5 will not move. That is how the rally has been. The reason is, anyone tracks the advanced decline ratio? If you look and plot the advanced decline ratio line, you will see that the entire rally, the markets have been moving higher, whereas from 2016 Feb till date, the advanced decline ratio has been moving lower. It's a very contrast movement. The markets are moving higher, which means more number of stocks should start participating in the rally. However, there are lesser number of stocks participating in the rally, because the overall advanced decline line has been moving lower, which means with each uptick there are lesser number of stocks that goes up, but with each down move there are more number of stocks that decline. This is a classical breadth indicator, and when someone says that this is the start of a new bull trend, I said this is not how bull trends should start. I mean, there should be participation even from the smaller companies, because those companies' profitability is eventually going to increase. And market should discount that well in advance. So that should happen, which is not happening. With each up move, the more number of stocks are declining, which is not a very, very healthy sign. But does it mean we go short now? No. Indicators are only there for providing an ancillary information and a secondary confirmation, because you are trading price, you are not trading an indicator. So you need to understand this can go on for some time, but eventually markets prices are going to catch up. Are you with me? So you have to look at a lot of those things in order to support your wave count. You cannot just do the wave count and say, this is my wave count, I like it, I know it, I don't care. Markets will force you to care. So you need to look at a lot of those indicators. I keep looking at breadth charts, I keep looking at these wave counts, time cycles, channels. There are so many techniques we apply. Okay, let's move on further. Now alternation we discussed. Extension we discussed, that if the fifth is extended, this is how it's going to look like. If the first is extended, how it's going to look like. Terminal impulse. Now this is a very, very interesting pattern. Terminal impulse pattern is a 3-3-3-3-3 pattern. Over here, the one you are seeing colon 3, it indicates it comprised of 3 legs. Where second is comprised of 3 legs, 3, 3. Now 3 does not mean only 3 waves. 3 means any corrective pattern. 3 means any corrective pattern, which means wave 1 is corrective, 2 is corrective, 3rd is corrective, 4th is corrective, 5th is corrective. So a terminal pattern by the name itself suggests that it's going to occur where? In 5th wave or in C wave. A terminal pattern is going to be forming either in 5th wave or in C wave. It cannot form in wave 3rd or wave 1. Terminal pattern is nothing but a 3-3-3-3-3 waves. In impulse pattern we saw it is 5-3-5-3-5 waves. A terminal is 3-3-3-3-3. Are you with me? In a terminal shape pattern. So understanding the pattern is most important. Then if we are in corrective, it's not impulse for example, then are we forming a zigzag or a flat or a corrective mode triangle or diametric or extracting triangle or complex corrective, double corrective, triple corrective, double combination, triple combination? There are so many variations. There are so many variations in correction. There are so many rules in impulse, but there are so many variations in correction. So simply imagine when we are in corrective mode, don't you think the predictability is going to take a hit because you don't know which correction is forming? It can form a diametric, double correction, triple correction, double combination, triple combination, zigzag pattern, flat pattern, zigzag flat triangle. There are so many possibilities that open up. And that is why when the corrective mode is on, the predictability is less, and that is why you have to rely on many other methods like moving averages, channels. But when the pattern is near completion, you are so sure there is no other possibility, and this happens not often. Once or twice in 6 months it will happen that you are so sure this is the only way market should behave. And trust me, when it behaves that way, you make a killing. When it behaves that way, you make a killing. Things have been different post the Brexit. When the Brexit happened on 24th of June, there was a sharp gap down of 230 points. I remember it distinctly, and that time was very difficult and challenging because after a 230-240 points gap down, you don't know whether the gap is going to be filled or it's going to collapse. It's very, very challenging at those times, and then the rally started, and that rally again happened in a corrective mode. Which pattern was forming after that is a diametric. I'll show you on the chart. And that is how it was.
Retracement is not faster than previous.
Yeah, so the retracement was not faster, and that is a typical property how diametric behaves. So you know, we need to understand those patterns as well. Let's now start with, let me explain two-stage confirmation. What is a two-stage confirmation? That the fifth is over and the next leg is starting on the downside. So what is a two-stage confirmation? Let me show you that. Please bear with me, it's going to be a little challenging for me to not use both of my hands. No, but people at the last cannot hear. Okay, that's good. Okay, I got it. Okay, let's do one thing. Let's take a break for what, 15 minutes? Let's take a break for 15 minutes. I think by the time they'll resolve the mic issue also, and then I'll start with corrections and show you the two-stage confirmation, how we can use, and we'll be discussing about diametric and various other patterns. Okay, great, thank you. Whatever rules we have learned so far. Rule number 1, Wave 2 cannot address more than 61.8% of wave 2 cannot address more than 61.8% of wave 1. Wave 4 cannot enter into territory of wave 2. Wave 3 cannot be the shortest wave. Wave alternation should be present as much as possible within waves 4 and wave 2. Corrective waves like wave 2 should take more time than the preceding impulse wave. Wave 4 should take more time than preceding impulse wave 3rd. Then we had a touch point rule that not more than 4 points should be lying on the channel. If there are more than 4 points lying on the channel, then it is not impulsive but corrective. And one wave should be extended. So unless if and until one wave is extended, it's not impulse. So and most probably it is the 3rd wave which is extended. There is a possibility that wave 5th can be extended or wave 1 can be extended. No part of wave 1 or 3rd should break the 0 to trend line. No part of wave 3rd or 5th should break the 2-4 trend line. If there is a break by wave 5 in the 2-4 trend line, then it is probably forming a terminal impulse pattern and it is not forming a normal impulse pattern. In case of a terminal pattern, wave 5 is going to look like terminal can form either in wave 5 or wave C. In case of a terminal pattern, it is going to be 3 waves. All rules are not followed in a terminal pattern. There is a tendency of 2-4 trend line to be breached when the 5th is forming a terminal pattern. In case of a terminal pattern, wave 5 can overlap with wave 2 or it should overlap with wave 2. And after the 5th is complete, there should be faster retracement below the 2-4 trend line than wave 5 took to form, which is what I am going to cover now. Any doubts? Okay, so let's move on to what is the 2-4 conformation. Now, two-stage conformation is a one powerful technique that is defined in Neo Wave, which ensures that probably the prior move which was ongoing is complete or not. So, in case of an impulse pattern, we have 1, 2, 3, 4 and 5th. This is not as per all the rules, but assume all the rules are being followed in case of this impulse. Let me draw a 2-4 trend line here. This line is known as a 2-4 trend line. Now this 2-4 trend line is a very important trend line because this trend line defines whether the 5th is over or not, or whether 5th is extending. So for example, over here if we see that wave 5, so this is wave 1, this is wave 2, 3rd, 4th, and this ongoing wave is wave 5. Now this wave 5 has taken say 10 days to go from point 4 to current level, and there is a sharp move on the downside. Now this took 10 days to move from 4th till the end of 5th. This move on the downside, on the opposite side, has broken the 2-4 trend line in less than or equal to 10 days. So when the 2-4 trend line is broken in less than or equal to the time that wave 5 took to form, it indicates that the prior move, impulse move, is over. So when wave 5 took to form 10 days and the next leg has broken the 10-day rally in less than 10 days, this is the first stage confirmation that wave 5 is over, the entire impulse is over, and the next trend on the downside has said that your research report has misprint on it because you mentioned 61,000 Sensex instead of 6,100. I said that why you think it's a misprint. He said that if you are an analyst and you follow certain principle doesn't mean you do anything and everything. I asked for a justification. So I said that in 1979 Sensex was at 100, 2008 it was 21,000, it rallied so much from 100 levels to 21,000, which is the rally of how much, 210 times in the period of what, 30 years, which means 7 times on an average basis Sensex increase. From 2003 it was 3,000, it went to 21,000 in what, 4 years. 7 times it increased in 4 years. What I am saying is from 2008 to up to 2019, why in 10 years we cannot rally 3 times? Then after a year, about in 2014, I was speaking at a news media, let me not name it, but I was asked, do you think Sensex headed towards one leg? You know, that is how things change. Yeah, that is how things change. If I go now, I am asked that, do you think Nifty headed towards 10,000? You know, people extrapolate. When gold and silver was, silver touched 65,000, silver the next gold, 1 lakh. See silver at 1 lakh. Forget everyone else. 2008, oil traded at $140, and there was a Goldman Sachs report which claimed oil to be $200. And then oil crashed. Now the Goldman report about a year back, oil trading at $10 and bounced back to 40. With all due respect, but people do extrapolate. There is no faster retracement of the last pricing segment so far. So which means that there is a possibility we might have one uptick still left on currency. We might still touch 70 levels eventually, and then the fifth should complete and the strongest of the USD and move should come. Yes, please.
Who can be a triangle?
Sorry?
Who can be a triangle?
Over here, this wave too? No, it's a complex correction. So when we do complex correction, we'll see that. I am going to give all due respect to all the indicators. So the only thing is I need price confirmation. Unless price is confirmed, the problem with us is we look at so many indicators and we trade based on that, which is completely wrong because prices does not confirm. The fall on Nifty did not break the level of 8688. All the while it did not break the level at 8540. Trust me, 8540 has not been broken for so many days, so many weeks now. So I need confirmation below 8688 that the top is formed, or 8540 that the top is formed. So that is very important. So when we are trying to capture, but at the same time these indicators warn us that when everyone is looking at it as a new bull trend, you should be warning because the advanced decline ratio, let me show you on the report, the advanced decline ratio has been constantly deteriorating. If that is absent, how can it be a bull trend? In USD now you will be able to recollect the wave 2 which was running. So this is known as zigzag W, this is known as X, and this is known as Y. And यहाँ पर we had impulsive 1, 2.
So how long
X would be either less than 61.8% of the prior correction, or it will be 161.8% of prior correction as per Neo Wave. But when the first correction is flat, there is a possibility X will be equal to the first correction also when it is a flat. So flat X and a triangle will result into X wave somewhere around 100% of the flat, first flat. So this is Sensex. Now this is the big X move. This is X because this looks like a diametric, running diametric, because none of the corrections took more time than the preceding impulse. So there was no time correction. And that's why this is probably X. And after that we are forming a running triangle because we are seeing contraction in between. And once this is complete, we either complete wave 2 or wave 4, we don't know. Any which way, if fifth or third is going to open up, it's going to be 61,000 is going to be minus Q. Yeah, absolutely. So that's what. So over short term, there is a possibility of correction, but over the long term, I am extremely bullish on market. Okay. Short term means once we get a confirmation and market still. Probably over say 3 months. Correct. So we need to evaluate once the correction starts, which pattern is forming, then we get a very high predictability for how long it's going to be. So 3 to 4 months probably yes, we should start seeing some descending of correction, and once that is complete, the bigger longer term trend which is there should start. 3-4 months is just as of now, but it will depend more on once the correction starts. What is correct, correct. Okay, now let me share across few more things. Okay. On our website, if you go to wavestrategy.com, there is a free member login. In that free member login section, there are certain videos which we have put there in case you are able to get into that. Fair enough. If you still have questions, I'll share across. I have a 1 hour of crash course video on NEOWAVE. It's not NEOWAVE, it's on NEOWAVE. So I can share across that links with anyone. You can just drop me a mail, or you can probably visit the website and register your email ID. So you'll get a lot of things over there. There's a discussion forum. If you have doubts, questions on the website, you can do it.
I think it was quite an interactive session because I could hear a lot of questions coming out. Hope it was all beneficiary for you. So as a gratitude from ATMA for giving his time, his valuable time, I request Sumaya to give me the as a token of love. So next meeting will be published on our website. It will be the month of October itself. So soon it will be published on our website. And any inquiries regarding today's session or anything, please feel free to get in touch with us. We have the entire team working 6 days a week. So you have live chats, be it Twitter, all the social media handles we there everywhere. You can feel free to get in touch with us and we're ready to help.
Only for 6 days. 1 day is there.
Yeah, 1 day is a day off.
We have conflict in October. If I'm not mistaken.
We will be publishing about the same on our website. So you can get the details of that on the website. The PPTs of today's seminar has already been mailed onto your email.